European leaders are meeting in Brussels today to discuss initiatives to jumpstart the European economy. Dell warned of difficult times ahead as corporations pull back on spending after reporting weaker than expected quarterly earnings last night. I'm Taylor Schrantz, and the morning call starts right now.
Good morning, I'm Scott Rutledge, Chief Strategic Officer of T3Live.com.
And I'm Lindsay Bell with The Street, and together we bring you the morning call. We tried to get a two-day bounce out of an oversold market, but of course that was ruined by more headlines out of the European Union. Greece might exit the Union now. I don't know what's going on over there.
Just reality setting in.
Yeah.
Everyone has been in denial. We've been trying to kick that can down the road, with different types of Band-Aid type solutions to what has been a very complicated problem. And even though everyone says, oh, we're going to keep Greece in the Eurozone, can't happen. Don't give them any more money, let it go, and then let's see what happens with Spain and Italy, and let's just absorb these headlines and see where the market takes us instead of continuing this prop-up game, because the prop-up game gets us absolutely nowhere.
Exactly, and you know what? We've come back 9% since the peak of this year so far, but is that enough? Because we're seeing the exact same thing we saw in 2010 and 2011 with bad news out of Europe, and you know what happened in those years? We fell almost 20%.
It's almost like you could rewind and say, what problems did we have last year or the year before? And we're hearing the exact same headlines. And last year we were 22% off the highs, the year before 17%. So traders and market participants are trying to figure out, is 9% enough? We just had a bit of an oversold bounce. We went to resistance too. If you just take a quick look at the chart, you will see, if you try and be methodical, you don't have to solve the world's problems. And if you look at this trend that we've been in that broke right here, really that's all you needed to know. You had your left shoulder, your head, your right shoulder. Right in here is when IBD went to correction mode. Right in here is when you had the France elections and the Greece elections, and they decided to switch gears, switch course, a course to nowhere, and then you had that move lower. So from here, after a move from about 14 and change straight down to 1290, it made sense for a little bit of a bounce. So now, as we're here, question is, was that it? So one of the hardest points as a trader is taking the trade. I know I sold a lot into just say 132.50, 133 in the spiders. And I didn't really reshort to get as net short as I would have liked. And that's a hard thing to do, is figure out where to sell the oversold bounce and where to reshort, because we could have went up to about this 1345. But yesterday we reversed. Today we're getting downside follow through. Now the question is, do we hold last Friday's pivot low? So every trader is going to write down 1291 to 1295. Very, very important. There's a little level we're opening up at now, which is like 1304 to 1306. The easy trade would be a snapback from here for a higher low. I just don't know if we're going to get that trade, because the easy trade has been hard to find.
The easy trade has been hard to find, but let's talk about some sectors here. We're going to get into the financials, because yesterday it was nice to see that this group was one of the leaders, which is something we haven't seen from the group in a while. But is momentum sustainable given all the headlines out of Europe?
I don't think so. I just think it was another bounce type play. They've been battered, they've been bruised, they've been in liquidation mode. If you look here at the XLF, we came into a really big support, came down right to here. This was the level that we drew. It held on what was this? This was Monday, and then Tuesday you had a little bit of a bounce. Couldn't even reclaim this past resistance. If you look here, this support was 1440, and support turns into resistance, and we almost got there. At this point, if you sold here in the financials, or sold when we broke here and said, you know what, I want to buy a tier 1 dip, just buy tier 1 in this area. Use this as a stop if you want to be uncommitted for more downside action. But then if you're looking to leg in, here is tier 1, and then you have to just wait and wait and wait. And if we get down to this 1250 area, that would be tier 2. So either, I think, one little level to buy here, but again, we've seen no reversal pattern. The market has a lot to prove. No need to be a hero whatsoever.
JP Morgan was a leader yesterday. I mean, the stock's been really beaten up with a multi-billion-dollar trading loss that they're expecting, but there's a lot of bad news priced into this stock already. That being said, I mean, there's no real catalysts coming up, and the visibility on this trading loss is still very uncertain. So I think for long-term investors, this might not be the right point to enter, but what's it look like for a trader?
It looks like we just went from 46 down to 32.5, and I know I tried it a few times, and finally it got a little bit of its bounce. So it's almost like you're at a roulette table, 14 reds in a row, finally we got a black. The question is, can you get a few more? Yesterday, the banks joined the oversold bounce that helped fuel it, but then they petered out also. I don't think you have to put a lot of money to work here. If you want to buy a little bit because you sold correctly, be my guest. If you look at the chart of JP Morgan, it did give you some signs. If you remember on this day, the day earnings came out, they sold it. To me, that's a sell signal. Then once we broke this support level, another sell signal. Then obviously when we broke this area of 4180 before the news even came out, another sell signal. So with that said, if you got out in these areas and you're like, you know what, I want to dip my toe in, this was one area that guys tried it, but then once we broke below this pivot area of 35.76, you had to get out. Now we have a new pivot area. So if you're a short-term trader, guys might be long versus this area, 32.26. If you're looking for to tier in, I would only be in tier 1 in this area. If you don't want to stop yourself out here, if it breaks, then the next level is all the way down here at 28. So just know that that's there. There is a micro level right around here at 30, but I would say that traders will be trading long versus here. Question is, can it bounce a little bit more and fill this gap? So you have to really be perfect to play for that. Today it'll be interesting with the futures down and the strength in the banks yesterday. Can the banks go green today and help lead us off our lows? So as a trade, that's what I'll be watching to see if they're buyable in the first 15 to 30 minutes.
How about Morgan Stanley? It's been a laggard all year, and this whole Facebook IPO debacle is not helping things. Is this even tradable?
No, I think it's an avoid. I think it's a problem waiting to happen. Who even knows how much they spent to try and hold it? Who even knows the lawsuits that they're going to have? Who even knows if people will do a deal with them again? It's one of the worst looking ones out there. I would just avoid Morgan. Sorry, guys.
Goldman Sachs got a little bit of a bounce yesterday, but the trend's been down here. So what do you think?
Again, every rally is sold. It tried to be strong in the morning. Guys in my office made some money, and then it just faded at the end of the day. If you look here at Goldman Sachs, just like the rest of them, they're broken, and they just keep stepping lower. And until that changes, you don't need to be involved. Some guys will trade JP Morgan Goldman versus 94, had a little bit of a move. I guess if it could hold this lower area and put a few inside days, there might be a trade above 100, and that would be good for the market. And then maybe it fills that gap. But at this particular point, after a 2-day move, you haven't got much more than that in the banks recently.
The regionals in the bank space, the regionals have been doing a little bit better, and that's just because of the Europeans been weighing on the big money centers. And Jim Cramer and Stephanie Link at Action Alerts Plus have actually preferred this group for quite a while now. One name they've been looking at is USB, which has been strong too. Yeah,
this stock is still trending, and with all stocks, though, when you're in corrective mode, usually 3/4 of them get hit. So the question is, what's your time frame? If you look here at the chart, you'll see it's still intact. You did get somewhat of an outside day right here, which was your sell signal. It wasn't so extreme, but it tried to break out and failed. So if you sold there, there's some support right around this 30. But like everything else, if you look here, it's had a big run, and if for some reason, it starts to filter down to the regionals also because they just want to sell everything, you do have an uptrend right here that it's coming close to breaking. So if you're uncommitted, use 30 as an exit. If you're looking at it as an investment, if it breaks this, you have another level to buy, which comes all the way down here around 28 to 27.19. So you could trade versus this level, but this level to me as a trader would be very important.
We're going to get into some other really oversold names after this commercial break, and we'll see you then.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders to understand how to develop an edge in the markets so you can put your money to work with confidence. The T3 Live approach includes a mix of training, trading, and technology to help you learn to recognize, adapt, and ultimately take advantage of different market conditions. So what actually separates T3 Live from other educational firms? For one, transparency. We show all of our positions live, so there's no smoke and mirrors. Basically, we put our money where our mouth is. We have to because we're regulated by the SEC and the Chicago Board of Exchange. Number two, we're real traders. You'll be learning from real professional traders that make a living trading their own proprietary trading accounts, not just instructors that don't trade. Your goal should be to associate and learn from big traders who can teach you how to take your trading to the next level. And three, credibility. Millions of people turn to places like CNBC, Wall Street Journal, Fox Business News, and these outlets actually look to T3 Live for information. No other educational firms are asked to be a consistent contributor. We at T3 Live would like to get you started with a step-by-step method that has been proven over time. The same blueprint for success that I've gone through. It's not a weekend seminar, it's an approach, a mindset, a process to show you how to take control of your financial future. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our Foundation 30-day online home study course. The reason I'm willing to give you such a valuable course for free is I'm sure that once you complete the program, you'll want to continue your education with our team. All you have to do is fill in your name, email address, and I'll see you on the other side.
We're going to get into the trenches with some oversold stocks and see if they're oversold for a reason or if there maybe is a turnaround with some of these names. Let's kick it off with Estee Lauder. This stock's down about 16% from its recent peak, but they have this European exposure that I think could continue to weigh on the name.
Yeah, a lot of people like to trade it oversold names. I only do it with like a red dog reversal plan because typically stocks are oversold. That means they're beaten up. That means they're technically broken, so they don't have to rally. Sometimes it's good to play for cash flow, but ultimately the stock's telling you something. So if you look at Estee Lauder, you will see that this stock had a major gap right here that didn't even come close to filling. So if you were involved, that was one of your flags to just say get out of the way. It never even came close to filling it. Came all the way down to support, which it's just hovering against. So if you're in this, I guess there's a small chance that it could start trading above 55, 56 for some type of oversold bounce. But if you're playing it for that, be careful, because if it does give way below 54.38, I think the shorts will be all over this for what a move could be down to the next support, which isn't down here until about 47. So it's trying to protect this gap that was put in place all the way back here. So I would say the longer it stays here with no bounce, the more the shorts are going to get in at below 54.
How about Abercrombie & Fitch? This is another one. They've got European exposure. They reported earnings last week, and investors seem surprised to hear that their Hollister Europe business, which is two-thirds of their European business, had a negative comp, which shouldn't be so surprising. Anyway, the stock is really cheap. What do you think, looking at the chart?
Fundamental people will call this cheap and say you have a long-term time frame. That means they're stuck in the trade and this trade has been broken. You look here at the chart, you'll see, look at this huge gap down. Huge gap down, obviously never even thought about filling it, and then you had another pause and then another gap down, making more holes in Swiss cheese, and then, you know, in this lower range, it never really rallied whatsoever. You had a small double top here, now it's on the dead lows. I wouldn't touch it. I think being short here is sort of dangerous, because I probably in the next few days you're going to hear some type of takeover talk because it's that cheap, and who knows, maybe there is value there. But for a trade, I would think long side, unless you really have a long-term plan. You know, be there as a trader. If you're still sitting there short, I think you're being a little piggy, because this is some type of news release away from maybe some type of squeeze.
Continuing with retailers, there's Limited. They own Victoria's Secret and Bath & Body Works brands. They had a really good first quarter report last week, but they provided really weak guidance for the current quarter. What's the stock look like there?
I don't know. I see this. I see the European exposure. I see another broken chart. I don't think many people are going to those premium places anymore. Maybe you buy something there for the holidays, but I know my wife's going to TJ Maxx. Anyway, at this point, you know, you look at the chart here, you know, you had a move lower. It's tried to hold support. I know guys were looking to short this below this level here of 47.66. You have another move lower, going sideways, giving that bull flag type of pattern, no real bounce. So if you are trading this for a bounce, you better get out of the way if it breaks this 44.98. If you're looking for a short for continuation, a break and close below this could take you all the way down to at least a 200 day, which is somewhere around 42.83. So to me, you know, this gave you some signs to get out of the way, and at this point it still looks weak and I would avoid it.
How about DuPont? Stephanie Link was buying this actually on Monday. It's down about 10 or 11% from the most recent highs, but she likes the name because of the benefit from the low natural gas prices and other commodities, and then also its exposure to higher growth areas like agriculture and health and nutrition that provide steadier earnings. But what's the chart saying?
At this point, there was an exit sign on DuPont, and if you did exit there, I could see why she was testing some of the support here. If you look at the chart, you know, like this was that uptrend that got broken right around 52. So if you sold it here at 52, you know, trying it here at the 200-day makes sense. But you know, at this point, I don't see much of a rally here. I know she has a long-term approach, which is cool. For me, I would think if you don't have a long-term approach and it breaks this lower area, if this breaks 47.81, I think you're going to see a move down to 44. So at this point, if you're trading it long and you're uncommitted, use this as a stop. You know, if it does decide to rally, I think you're going to see a lot of resistance coming into this 50.97. So just, you know, have a long-term plan or be uncommitted and use that as your stop if you're involved.
On Intel, I think you said that 25.90 is the macro breakout level. Is this one going to be able to hold above that, though?
The 25.90, you mean support?
Support, okay. Yeah, sorry.
At this point, all of these multinational, even like the ones with the cleanest balance sheets, are all a bit hurt. You saw Cisco with their report, not great. Dell today, Intel's doing okay. It's acting a bit better, but they all get under pressure, together. So if you look here at the chart, question is, if you look, what could you have seen? This was a day when it tried to break out and failed. You never want to see momentum leave like that. That's a sell signal. Then it came down and tried to hold this prior breakout. Pushed through, which got people a little bit bullish, and then failed again. At this particular point, it's above the 200-day. It's still stair-stepping lower. I would say if you're not involved in Intel and you're looking for an entry, this spot's decent. I'd rather see you wait till the 200-day. But again, some things don't get where we want them to go, so use this as your area. And if we do decide to rally, all these things have their moving averages in front of them. Technically, they all need so much time to repair, and Intel also needs that time as well.
Why don't we get into some quick hits? Let's kick it off with Facebook. It was down another 8% yesterday. This has just been a sob story.
Yeah, it could have been one of the best days in America, and it turned out to a travesty, which we're seeing a lot in the headlines. Whether it was the investment bankers that gave it too high of a valuation, whether it was NASDAQ that flubbed the trading, whether it was some retail investors out there just putting in limited orders saying, I don't care. A lot of people, contributed to this perfect storm of a debacle. So at this point, I'm just trading a level versus a level. I think it's actually up like 20 cents today, pre-market anyway. If you look here, here's the previous low. Yesterday, there was actually a trade in it. When it came off that low. At this point, I would say only trade it with a plan. Yesterday's low was 30.94. If it were to go negative and push through this 30.94 and get people out who are using this as a stop and then come back above it, maybe we get some kind of tail to relieve some pressure. But at this point, I don't think you just accumulate it. I would think fundamentally, not to start talking valuations, I like the number 28. At 28, I think you could start scaling down and accumulating maybe 28 to 26, but until then, it's just a trade for me.
And that was the low end of the original pricing range that the bankers had set.
Right, and it would have been nice if it came out there.
Yeah. Let's take a look at LVS. That was one that you've been watching, and it got a little bit of an oversold bounce, but what are you seeing there now?
I'm seeing you have to take your trades and run. The stock's been weak for over a month now after that sell signal. Finally, we did get a red dog reversal bounce, and that just shows you how you need to use a tier system so you could sell some and hold some. And lately, anything that I hold longer than when it's in motion, I get stopped out of and I lose on. So if you look here at the chart of LVS, here is that red dog reversal. When it went through 46.15, put a low in, here's your buy. Tried to push through this small descending channel, didn't have enough energy. I still think if you sold yesterday, and I did sell mine yesterday, you could try nibble versus 46 to see if there's some kind of floor here. But if this gives way, you're going to see lower prices, and then that market's just that weak. Because if you look where we came from, around 61 all the way down here, if it can't hold, then there's more selling to come. So trade it long versus area, but don't put too much size.
How about Google? That one, it's at $600. It seems like it's kind of lost that Facebook premium that it had for a while. Is this one breaking down?
This one, to me, is starting to look uglier. You had 2 quarters now where it didn't act well, 2 quarters where it held the 200-day, but I think those macro investors, and rightly so, are starting to get frustrated, where I know traders are going to look to short this thing. If this thing breaks and closes below 593, you're going to see major support give way, and I might even short it. I know guys like, oh, this was your high beta stock of the year, but we trade real time, things change. Don't just stay in something because you said this could happen. You know what? The market's not confirming it right now. So if you look at it, you'll see the chart. Pretty damn ugly, okay? This is when I put it on as my trade of the year, because going sideways, it was an awesome pattern and actually hit as high as, 660 before coming in and failing. Anyway, at this point, it's been holding this 593 area. You had a big move with that Facebook value, but obviously the market didn't give it its valuation, so they took away this little premium here. Another move, failure, not good to see. And then you had a little bounce off this, negated, another bad sign. So at this point, it starts getting below 593. Guys are going to lace into this thing. Next area is 580, and then under 580, there's really nothing that compelling all the way down to 480. So just be careful. If you're a macro investor, do not hold this just because I said it could be the stock of the year, because right now it hasn't proven that, and we could always re-enter in a better market at another time.
Apple, it's been a good indicator of where the market's going in. It's been great to trade for cash flow purposes. What are you doing with it today? Because I know you keep an eye on this one closely.
Apple, we've been trying to lean on it short ever since it broke 620. We talked about that pivot at 555, another great short. And then coming into this week, I'm like, you know what? It's been battered and bruised. Let's see if it holds its 100-day. It did give us a nice 30-point trade. Going into yesterday, it was up $10, and then it failed at the downtrend. So if you look here, you will see, you could trade these ranges and make a lot of money doing it for cash flow, or you could try and take a more macro approach. So if you were trading for cash flow and you bought when it came back above this area here at 530, great job. I actually started buying it around 537, and I said I'm going to book some and stay with some. So I sold some into this downtrend, and I held some to see if I could hold it actually longer than a few hours, which you're not proven that you could do in this market. So I would say for the market to stay somewhat intact and for Apple to show some short-term relative strength, leadership qualities, it should not give way to this 546 to 550 area. If it opens negative today, goes positive, I think it's constructive. If it starts breaking that zone, then you know that it's still trapped in this downtrend, and it could come back and retest the what's it called, the 100-day that's now moved up to 533. So at this point, I'm going to stay with it. If it, for a 60-minute level, stays below 548, I will get out of the way, and then I'll just get back to cash flow trading it, and it doesn't deserve you holding it longer than that. Finally,
let's take a look at gold because it broke a 3-day bounce yesterday. What's it going to look like going forward?
Well, gold's been in a downtrend since it topped out, since that outside day. And then like a few months back, the Fed came out with their news and it was sold again. So if you look here at gold, there's a few different things. First things first, here's that outside day. That was your top. This was, feels like this was a decade ago. It wasn't that long ago. And then here is that high right into the Fed day. Okay, look at this potent day engulfed this entire mess. So now you go look at it a little closer. This was that intermediate downtrend that we've been trapped in, that a lot of guys, once we broke below this 158, they got short. So it made sense to try and cover in front of this area, in front of that low that was back in December. But in order for it to have more momentum, we were talking about how it had to hold above this 153, 154 to show commitment for what could be a retest of this area. It didn't happen. It broke it yesterday, got momentum guys out of the way, and now this is your next point of reference. If we close below 148.60 and break this double bottom, you're going to see lower prices. You go to the monthly chart, which is a bit scary here. You look at this double bottom here, this breaks. Next real level is not down to about 140. So I know if you're a gold bug and you just think the gold has to go up, technically, it doesn't look that way, and I don't think gold really has a thesis. They don't have a reason, and I think guys are looking more for deflation than inflation. So just don't, hold it and go underwater when you could actually trade this.
So those are the stocks and the sectors and the levels in the S&P that we're looking at today. Be sure to check in at the end of the day for the daily recap with Scott and the T3 Live team.